Hello everyone, it is Christmas Eve and all through this house, the market is stirring and I scour through it with my mouse. And I'll tell you what, taking a look to see what we have for the end of this year. Will there be a strong finish to the Santa rally the last week of December? Signs are sort of pointing to yes in some areas, and we're going to have to take a look at those. We'll look at SPY and QQQ. I have some very interesting notes about IWM and what we want to look for going forward from here, and also a bit of a cautionary tale, if you will. And then we also have NVIDIA, Tesla, and then Bitcoin is at a super interesting spot right now that is very much worth talking about. So without further ado, let's put up those charts. We'll kick things off with SPY and we'll get to some of those other intricate details. So one of the big things that we see when we look at SPY tracking the S&P 500, we'd lost the 50-day here and here. Here we were down below it for the close. We peekabooed up above it. And then yesterday, got pretty much a full candle close above it. That is a bullish sign. RSI still a little bit subdued just south of 50. We want to see that push up above 50. That can be an extra bullish sign for us, hopefully pushing us up over that 610 mark. Finally, that's where it got rejected before, just danced right along. It couldn't quite break it. Jerome came out and spoke, and then boom, the markets tumbled down a little bit. But so far, the markets seem to be a little bit leery, cautiously stepping forward from where they are right now, stepping up from where they are, giving us a nice little recovery. We do need to get back up above the 20-day at about 600. It's actually right now sitting at 601. So pushing up above that, that's going to be that next big test that we have for the S&P. If we fail to break the 20, we could be back down retesting the 50. So be on the lookout for that. So moving over to the Qs, we are above the 50. We didn't actually quite get there, at least for the simple moving average. If we put up exponential for a moment, this red line, you can see we even stayed up above that. If I stretch it out, you can really see that that candle never quite made it there, but it did get darn close. So up above the 50 EMA, SMA, good thing. Once again, you can see that recovery. And we are actually up above the 20-day, which is a good thing. And what is helping that out? Well, NVIDIA is actually currently back up above its 20-day, trying to open up above its 50. If we get a strong open above the 50-day simple moving average with this pink line right here, we could have that further upside, hopefully being able to push, beat out this last top that we had, the last peak being at 146.54, breaking up above that gives us a green light to finally, once again, breaking above 150. We're going to have to be watchful for NVIDIA. If it can't keep its 50-day, if it can't keep the 50, most likely it's going to lose the 20. Again, we're going to have to watch for that. So that's what we want to watch out for. That 50 simple moving average is the big thing for NVIDIA that is currently being fought during these pre-market hours. Market does close today at 1 p.m. So we'll see when you're watching this. It could set you up for that post-Christmas view of things as you watch this. So moving over to Tesla. Tesla found support at the 13-period moving average so far. Yesterday, couldn't quite close up over this green 5-period exponential moving average, yellow and green exponential moving averages. I'm not sure I called it simple a moment ago. The red, the blue that we have right here is also a simple moving average, and then so is the pink line down here. If I take away the simple moving averages, you can look at just the exponential ones that I have on here, the 5, the 30, 13, and the 50. And keeping that 13 is going to be huge for us. That pushing back up above that 5, keeping that cross of the 5 down over the 13 from happening could give us that further bullishness, and we could be getting just enough rest for Tesla to take back on that mission towards that $500 mark. We're going to have to watch and see whether or not we get that. I'll get to Bitcoin in just a moment. I did want to talk about IWM and what it's going to take for IWM, the Russell 2000 stocks, to return to strength. So let me move off the charts for just a quick moment. The SEP, what we saw was stronger GDP coming in, but then it also told us a tale of higher inflation for the foreseeable future as per the Fed with what they believe is going to happen moving forward from here. And so that inflation, not necessarily great. The unemployment rate, they said, when you listen to Jerome Powell speaking, he said, expect a little bit more softness there, that we have loosened conditions. Well, then that puts in the question, does the Fed have control of that market? By the way, I don't know if you saw this guy popping into the camera. He might jump back up on my lap there. His name is Benjamin, or Benny actually, so if you want to say hello to him in the comments, love to hear from you. But back to the Fed. So for the Fed, for the inflation's a tough thing for them. What they did in the past to push down on inflation was that they raised the federal funds rate. However, with the loosened labor market conditions that they said are below 2019 levels, they can't increase rates because that puts further tightening on to the economy, and then the labor market could get even looser, and then we could see the wheels come off of that thing. So they are stuck between a rock and a hard place. So what do the Russell 2000 stocks need, or the Russell 2000 index? What does it need? we need the high GDP, and we need to see the next few inflation reports come in subdued. We got good news with PCE for November. We want to see December's numbers come in soft. Same thing with the CPI numbers as they come out in January. Those lower numbers are probably going to be big catalysts for the Russell 2000 stocks. So we're going to be watchful for those. And honestly, I do think that we're going to see some of those subdued numbers coming in. We're going to have to watch and see what exactly is going on if employers or if we have companies that are trying to make up for lower profits through raising prices. If they believe that they have that pricing power, then we might see some of those prices push up anyway in January, but we wouldn't necessarily know that until February. I will say I looked at my waste management bill this morning, and it went from $75, which is pretty much how it's been for a while, and now it's magically going up to $90 per month. So that is about a 20% jump in price just for that. So be on the lookout for waste management moving forward, that they believe that they have that pricing power. They can put in that increased price. Now, mind you, that could be local to where I'm at, but honestly, it could also be nationwide. So waste management, especially following the price tumble that they've had, maybe they start to see a little bit of levity coming back in there, especially if they get drops in diesel prices. Now, mind you, they also have natural gas factored into it. So we want to watch natural gas prices because they're using compressed natural gas as well, or CNG, I believe is what they're going with for the acronym for that one. So moving back over to the inflation side of things, we need that subdued inflation, but we also need to watch layoffs, which are big in December and January. Those are the two biggest months of the year. And the 2 months that we don't have that information, that puts extra weight onto what we see for unemployment and non-farm payrolls coming up in the beginning of January for December. That's going to be that first early indicator. So we need strong employment numbers, things to show that there's still strength with the jobs market, and then we also need to see that inflation is cooling more than expected, and we also need that strong GDP. Those factors combined are really going to be strong catalysts for the Russell 2000 stocks. If they start to spell out recession, or if inflation continues to hold out as high as it is now, or if it even starts to go a little bit higher, then we're going to see that downward pressure instead on the Russell 2000 stocks, especially if GDP starts to contract. Those are all things that we need to keep in mind as we watch those reports come out, and I'll keep on talking about them on my channel. So subscribe if you haven't, and watch as those videos come out, especially as we near those dates, or as those dates come about and we start to see the market's initial reaction. We'll see if it's something that's going to be temporary or if it's going to be a little bit more prolonged. So let's get back to the charts here. Russell 2000 up above the 200 days, so still long-term bullish, down below the 20, the 13 and 5 EMAs, down below the 50 EMA, down below the 50 SMA. So sort of in a mixed area. The RSI on the daily chart also down in bearish territory. So we need to see back up on top. The 5 would be a good thing. We are finding buying pressure right down around 218. If we lose that, I will say that there is really strong support, not only as per the moving average, the 200-day that's down here in orange, but also historically, there's a lot of support that we find right around 213, 214. So we're going to be watchful for that just in case this ends up being a bear flag kind of formation that pushes us down even lower. I do think that if we start to hit those values under $200 per share for IWM, that we're going to really start to set up ourselves for outperformance when things do turn around for the Russell 2000 stocks. We still could possibly have significant upside from here. It's still, even though there's a bit of a question as to and why you see the sell-off here, even though there are some doubts that are out there, I still think that 250 is on the table for the Russell 2000 stocks. I don't know if we make that climb from here on out, that we start to regain confidence, and we're going to have to see, especially as we get in that first week of January, if we start to get that first vote, that first step of confidence for the Russell 2000 stocks. As we get the jobs information from non-farm payrolls and unemployment, we're just going to have to watch and see. Now, guys, I said I'd wrap things up here with Bitcoin. Bitcoin is at a really cool spot right now because it is sitting on its 50-period moving average. So if it holds this, we can get that bounce and finally get that run to $120,000 per BTC. That I think is coming up, possibly even up to like 127 in the next jump that we take. The 50 could be a very good launching point in order for that to happen. So breaking the 50 or holding the 50 as support, good. So far, that's happening as I record this video. Breaking above the 20, which is nearly at $100,000 per BTC. Getting back on top of that, especially with volume support, is going to be the next big thing that it takes in order to make that next 20 to 27% push above that 100,000 mark per BTC. If we don't see that, we could see that continued softness going. I don't think that the crypto rally is done. As a matter of fact, this could be that doubtful period that we get leading up to, hey, is there going to be any sort of drama related to the ceremony for President Trump taking office. So we could have that doubt coming in as, what is going to happen? Will there be any sort of drama? Will there be any sort of pushback or anything like that? Once he is sworn in or near that time of swearing in, we could start to see more excitement coming into Bitcoin, as he's been pro-crypto and pro-Bitcoin very vocally, at least in the past several months, leading to some of the rally that we see. So guys, if you want to hear more of what I have to say, if you want to talk to me and my community members, I do have a Patreon community where you can go to the Discord that's part of that by using the link down in the description. And if you guys want to learn about technical analysis and learn to trade the way that I do using the bread recipe developed by Stockmo, there is a link for Stockmo Academy down in the description. Click that, sign up using the code word DOCTOR. It's going to give you a massive discount on that course, and you can pay for that course in as little as one trade using the bread recipe, which signals to you very easily. And the course walks you exactly through how to set it up, whether to trade up, trade down. Now, it can't tell you what to buy or sell, but it can tell you what to look for from when that movement could potentially happen. So you can paper trade your way into a point of proficiency where you have that confidence in order to really start to use your own money towards that and really start to see the power of that bread recipe. I hope that you do. Like I said, that link is down in the description. The code that you should use is DOCTOR, D-O-C-T-O-R. Like I said, massive discount for that. Don't forget about that community for the Patreon if you'd like to see my buys and sells, also see my technical analysis, and talk with me and my community members. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning. We'll see you next video.